Thanks for joining me for another episode of Simplify. Today, we're just going to be talking a little bit about what's happening in the marketplace. I'm hearing from people two very different stories. These stories couldn't be more opposite of one another. One group of friends is calling me and they're excited. They say, oh, the market is dipping right now. It's time to buy the dip. That age-old adage where people think that they're going to perfectly time the market, buy the dip, and make a bunch of money. But then there's the other group. The other group is really fearful right now. This can be shown in the Fear and Greed Index. If you aren't familiar with the Fear and Greed Index, I encourage you to take a look at my previous video. I'll post it here so you can watch that. But long story short, the fear index is off the charts. We're in a territory of extreme fear. We haven't been there for quite some time. And so it's important to keep in mind the sentiment around all the things that are happening right now. Now, like I said, these two groups couldn't be more different. They're both on polar opposite ends of the spectrum, but yet they're interpreting the same things that are happening in the market. Now, I'm here to tell you that neither of these groups is correct. In fact, they're both wrong. Now, I don't really know to what degree one group is more wrong than the other. It's likely that somewhere in the middle is an answer that would make more sense. But the truth is, none of us can know. We can't see what's going to happen into the future. I think that's really evident by what's happened over the last 3 months. Since President Trump took office, things have been in complete disarray. Now, I think this is part of the strategy. Shock and awe. Let's make sure everything is in turmoil. Let's make sure we're shaking every tree. Let's make sure that people are so confused about what's happening that they don't really know what's happening. Now, I happen to work in a government sector, and so I'm personally feeling some great effects from all of the decisions that are being made currently. And I see friends and colleagues who are also being greatly impacted. I don't really have a strong take one way or the other, whether or not these changes are good or bad. I empathize with all the people who are losing their jobs. I think that a lot of things are being done in a very unprofessional manner. It doesn't necessarily mean that the end result is incorrect, that we shouldn't be leaning out government a bit or trying to increase efficiency. And so there's a balance there, just like in all things. But put that aside for a second, let's go back to these two different cases for market sentiment. Now, the friend who is excited about buying the dip, let's start there because I think this is really important. If you take a look at some data, just open up a historical timeline for the S&P 500 and look at the data. We can just look at the last 10 years. Now, all you're going to see here is a steady incline. There are lots of little tiny blips on the way. Small adjustments, and these adjustments are anywhere from 5 to 10% of the market value at the time. What we just experienced this past week is really just a very minor correction, and in some cases it's not even above 10%. Now in the Bitcoin market, we noticed a much greater dip. That was around 20%, and we'll get to that later because it's a separate case, equally important, but a separate case. So I want to remind you, keep in mind the historical trend. You'll see as we go up and up and up and to the right, there are lots of small dips along the way. Notice though that the bull market, which is basically defined as a market that is growing fairly aggressively up and to the right, you'll notice that the latest bull market has been going on for quite some time. Now, this period of time is important to think about. Everybody is expecting some sort of recession, some sort of crash in the market. And it's true, so many things are overvalued right now. If you just look at most of the companies and their price to earnings ratios, you're gonna see that the valuation numbers are much higher than they have been traditionally. Now, we're not gonna go into depth on that because that's a whole topic in and of itself. But suffice to say that likely there is some sort of bubble going on. A lot of the economic indicators, the underlying economic indicators that would help us determine whether or not the market is healthy are starting to show signs of distress. Definitely in the housing market, we've seen some data lately that's very important. We're starting to see home sales decline even further. Prices are staying stagnant or going up in most places. In some places they're going down, but not in many. And interest rates are all over the board. They still remain close to historic highs, and there's really no end in sight to that. Couple that in with the inflation data that we're receiving, we're still well above 2% inflation, and that's a concern. Now, last week, we also saw unemployment numbers, and those were not as good as expected. More people are looking for jobs right now, and that's never a great sign. So all this to say, is it really time to buy the dip? I would argue not. I would say, because we just saw a small correction, you really need to be thinking about the long term here. Now, we might rally back, and it's important to look at the rallies. Do we continue going up beyond our last high, or do we just rally back to the same point and stay stagnant? If that's happening, I definitely take pause. I take a step back, and I don't concern myself necessarily with what's happening. I also don't change my strategy in terms of aggressively buying. I have dollar cost averaging automated payments into the market. I'm not touching any of those automatic payments. I'm just going to let it go, and I'm not going to change my strategy because I don't have enough data, and I know better than to try to time the market. I don't think I'll be successful. In fact, I'm almost certain I'll fail. And so I'm going to sit back and watch. Now, you'll also notice that people like Warren Buffett have an amazingly large sum of cash in reserve. This is usually a sign that there aren't any better investments out there than to just hold cash. And he's willing to take the hit from inflation on his cash because he doesn't think he can beat it or outpace it in any of the other investments he has available to him. This can also show that he's anticipating some sort of better value down the road. Something is going to happen. He'll be able to step in and get great value from the cash he has sitting on the side. This also goes to reinforce the argument that you shouldn't be buying the dip right now. If you do like to plan for these moments where you think there's going to be a massive decline, let's say 20 to 30 to 40% decline in the S&P 500, and in fact, historically, we've seen even greater declines, up to 89%. If you are planning for that, absolutely, by all means, keep a cash reserve on the side. But for most people, you don't have that kind of money laying around, and you're really just concerned with what you've got in the market now. Now, let's turn over to the people who are fearful. There are a lot of folks who get fearful, and what is their natural instinct immediately when you start feeling this fear? The instinct is to sell. Let's sell off before things go even lower. The picture is pretty bleak if you look at the news from day to day, and it doesn't seem like there's resolution to many of the conflicts that are ongoing. The Ukraine war is a great example of this, where President Trump and President Zelensky just had quite the blowout at the White House last week. So all of this news is really unnerving. I understand. But the best thing to do is to just block out all of the noise. You don't know what's going to happen. And if you sell right now, you might regret it. Now, every case is unique, and it depends on where you are in the age spectrum. If you're anywhere under, let's say, retirement age, 65, you really should be thinking about long term. You need to continue to hold investments. Now, there are unique cases, people who need money now. All of those things we certainly can't get to in a video like this. I'm talking about averages and generalizations, so certainly none of this can be taken as direct recommendations or advice. I am not a financial advisor, but I do know how I personally manage my money, and so I'm sharing with you some of these tips only to help you understand how I do it, and perhaps you'll resonate with some of these ideas. So it's perfectly understandable to be fearful right now. I made a big mistake this weekend and decided to look at my portfolio. I just wanted to see how bad it really was. Now, I tell people not to do that, and I try myself not to do that, but in this case, I failed. I hadn't looked in a long time anyway, so I didn't really have any recent data to peg it against, but I did notice quite the decline. You can lose a lot of money really quickly, but keep in mind, all of this is just theoretical anyway. Your investments are just that. And so when I'm looking at my portfolio, I automatically take off 20% from the top, and I assume that that amount is a variable amount. It's going to go up, it's going to go down. I don't really worry about these types of adjustments. I can't do anything about it anyway. Now, if I do see a much greater drop in the future, and I'm anticipating definitely something more substantial, I'm not predicting personally any kind of major crash, at least not at the moment, but I can envision bigger corrections in the downward direction within the next few months. And so because of that, I am holding a small amount of cash that I normally would hold that's not in my emergency fund. And I will deploy that if I really feel like things get low enough that I'm getting in at a reasonable value. But other than that, I'm really not changing anything about my plan. And so to both of my friends, those who are fearful and those who are really excited about the opportunity to buy the dip, my advice is the same. Don't change anything about what you're doing. Now is not a time to panic. It's not a time to make rash decisions. It's really the time to sit back, try to enjoy the beautiful part of life that has nothing to do with the markets. I would recommend you get into a hobby right now, you get outside, you get some exercise, you start really enjoying some of the beautiful things that are available to us, and get some perspective. So many people around the world are suffering right now. So keep that perspective in mind. Don't make any crazy emotionally driven decisions right now, and continue to observe and watch things as they progress. I hope this is helpful for you. Again, I'm just sharing some of my personal thoughts. I know that I like to watch what other people are doing and thinking during a time like this, and so I'm offering up some of my opinions. All of my thoughts and suggestions are worth exactly what you're paying. Absolutely nothing. Hopefully you resonate with some of the thoughts and you enjoy hearing how I think about these things. And if you don't, that's equally valid. In fact, I encourage discussion, so jump in the comments. Throw up your ideas. Let me know what you're thinking right now. And finally, if you haven't subscribed to the channel, please do so. I really appreciate the support. It's great to see that some folks are coming back every week to watch the new videos. So if you know a friend who might benefit from some of this information, please share the video, like the video, and join me next week for another episode of Simplify. I hope you're well. Take care.